Hello, Matt Blocki with EWA. Today we are talking through 10 tips for 2023 and how to maximize your financial plan. Tip number 7 for maximizing your financial plan in 2023. For clients that are approaching retirement or in retirement, there are some brackets that have been adjusted pretty significantly for planning around taxes, planning around Roth conversions, charitable contributions, etc. So the ones to make note of, if you are single, the 22% tax bracket cuts off now at $95,375, and the Medicare Part B, as long as you keep your income below $97,000, this is adjusted gross income basis, then you're going to pay the lowest Medicare Part B premium. If you go $1 above that, and this looks 2 years prior, so 2022 tax return will determine 2 years later your Medicare Part B premiums. That will start to get surcharged, and it goes up pretty significantly in these different brackets. So these are just the no-brainer brackets. Again, double those amounts if you're married filing jointly. Your 22% rate gets cuts off at $190,750. Your Medicare Part B gets surcharged above $194,000. So just hypothetically, for a married filing jointly couple, if your shown income is $100,000, we have a runway. We want to respect both of these rates. I'm going to pick the lower of the two. We basically have a runway of $90,750 to play with. For example, if we want to do a Roth conversion, if we have a large amount of pre-tax money, we can guarantee to swing that money over at a 22% tax bracket, also keeping your Medicare Part B premiums low in coming years, and get that tax liability out of the way forever. Then the appreciation grows tax-free, and it comes out tax-free either to you or to your children when you pass. Now, one thing to note, if it's two of you when you're retired and we don't do these Roth conversions and all of the assets pass over and now you're filing as a single person because one spouse is left, morbid scenario but very important part of financial planning, is if now we're planning for a widow, generally speaking, the highest of the two Social Security stays. If a pension election was taken to pay the survivor, that stays. All of the assets will go to the surviving spouse. So generally speaking, the income that's coming in to one versus two spouses is going to be about 90% of what it was when both spouses were there. However, the brackets for paying low taxes and then also paying lower Medicare Part B premiums, those get cut in half. So even if you don't have a want to pass money on, or your children are in a higher tax bracket than you, a Roth conversion can still make a ton of sense when planning that one of you will most likely outlive the other. And the Roth conversions can really save those rates getting cut in half if you're a single taxpayer versus a taxpayer married filing jointly where the rates are double.